We've got some fresh new young talent doing some things that I know you haven't heard before.
1, 2, 3, listen.
You got to have the why, and we know our why. So
you don't need to reinvent the wheel.
Yeah.
Millions and millions of people have done this already. You can get help, you can get a roadmap, you can save a lot of time, money, and frustration. Welcome to the Value Add Podcast with K&K.
Hey everybody, Value Add with K&K, Crystal and Kenny here. Just want to say thank you so much for the support, for listening, the comments, everything. Keep it up. We'll keep going as long as we can.
And if you like what you're listening to, like what you're watching, tell your friends about it, leave us a review, maybe even give us 5 stars.
We love those.
That's how we can grow and continue to bring you guys value and spread the word.
Thanks, guys.
Let me know where you'd like to start.
Yeah, fire away, Ben. Just tell me about, obviously Ben and I are talking here about, I've been kind of talking about it, but we met through a mutual friend, and I'll just call him a mutual friend. And I don't know if we want to use his name, but I'll just say mutual friend. And we both own real estate, and we're just not a fan of how things are being portrayed out there in the media to not pay your rent. And we want to kind of I'd like to talk to you about how that's going to affect us and other people and kind of what you're doing about that right now.
Yeah, well, I mean, what I would say is I'm a fan of good housing policy. I care a lot about housing policy. I'm a third-year law student at USD, and I invest in affordable housing in San Diego with my family. We own 30 apartment units in Logan Heights and City Heights, and we're really proud of our properties and the way that we've maintained them and been able to provide affordable rents at them. And so, I mean, this has been just a whirlwind. But when I heard about the particular policies that were being put in place, I started hearing from local mom and pop housing providers who either didn't understand what was going on, couldn't believe it, or were sharing their concerns but didn't know where to direct them. And I kind of just a week and a half ago, hearing all of this, sprung into action and got involved. I read the proposed eviction ordinance that was proposed at the city level. Mm-hmm. I got in touch with every city council person and their policy staff that I could. I drafted. I proposed a language that I thought reflected and took into account the $2 trillion stimulus liquidity direct cash injection that to me reflects a better policy of accomplishing 2 goals. One is the public health. We've got to keep people in their homes because of the public health reality. Right. But the way we do so matters here, and the policies and the policy choices that we make matter because we want to avoid a potential economic tsunami as a result of shutting down the economy. We have 6.6 million Americans filing for unemployment, right? So, yeah, I mean, that was the first step. It was a great effort, but it was a little too late, frankly. And so then after that, I created a survey, and we got over 300 responses from to paint the picture of who is providing the housing stock in an already fragile housing market. Not only who's providing it, but who's servicing it? Who are the people who are the plumbers, are the electricians, are the foundation repair people, are the roofers, are the
property managers,
property managers, right? And the word landlord is such a politically charged phrase, and rightly so. I understand. Like people's shelter is a very delicate thing, and when and eviction and so I felt a civic responsibility to paint the accurate picture of who owns this housing and what would be the second and third order consequences uh, from those folks not having the income that the federal government has set aside for necessity spending during these times. And so that's what I'm working on, as just kind of grassroots, volunteer, common sense initiative.
Well, first of all, I appreciate it because I know you probably spend a lot of time and effort. So I want to go back.
Well, I have time. I mean, we have we have time right now. Like,
Yeah.
so
Yeah.
I think about it as a civic duty.
No. I mean, I'm passionate about space. That's why I reached out. That's why I'm doing this. I'm putting video and content. A little bit of a quick background on us. I'm gonna ask a couple questions. Is my wife's over here in the corner, but we own multifamily. We own vacation rentals. We've done residential and commercial financing for 16 years. So the mom and pop investors that you're talking about are our clients. And we've worked with a lot of real estate investors in California and San Diego. And on top of that, we started a property management company in 2013 that we sold, but we at the height were managing 1,000 units. So as you know, you have 30, we manage 1,000. So I know what it takes. I know what it is to run a property management company, number one, and how thin the margins are. So we had a conversation like, what if we didn't make income from these properties for a month or two? That means I got to go out of my pocket, my personal money, and bring money into a business. And how long am I going to do that? Because, with property management, the expenses are really high. You've got managers and accounting and all this stuff. And if you're not getting income in, it's, we're not Apple here making billions of dollars a year. So, and then there's all the other people. Then there's the tenants and the owners. And we know we gave the distributions to owners. So we know which owners said, I need that $5,000, $10,000, $2,000 a month. I depend on that money. So we had to do a repair on the property or anything. We knew how tight they were. So I know who you're talking about, which when you say, hey, let's just give them free rent, I immediately went like, do you know that's not just that simple, because there's a trickle down effect. And I know we're going to get into that. So that's kind of like some of our background. And we take pride and passion in this because I'm not just like owning property and it's in it for the investment. Like, I like to provide good housing. I like to make sure it's nice and clean. People have a good experience. I want renters to want to stay on my properties. I'm not trying to be a slumlord. I'm trying to do the right thing. That's why I'm here saying it's not about somebody not paying rent. It's about everybody has to understand this, like, as a whole. This isn't about somebody not just paying rent. This is about the trickle down effect that causes. That's why we're really here. And so I wanted to go back when you talk to local politicians, authorities, whatever, in here, California. Can you talk about a little bit about, like, just not names, the conversations and how that went and feedback and things like that?
Sure. Yeah. I would just, before we get into that, I would just echo uh, your passion about providing housing, right? So we own two properties. One property is 14 units. 6 of our tenants are on Section 8. I have relationships, like great relationships with some of them, not all. I mean, some of them I don't really know on a personal level. The building we bought, when we bought it, was on this raised foundation. I mean, the thing looked like it was built in the 1940s.
Yeah.
Right. One of the buildings. There are 2 buildings. One was in the back. It was actually built in Golden Hill, and we found the records that in like 1946 it was moved on a truck to Logan Heights and placed there. And so they're both on these. I mean, right? Like, they're both on these raised foundations, and one of them was hanging by a thread when we acquired it. One of the best feelings that I've ever felt personally was a couple months ago, end of December, right before 2020. We finished replacing the foundation on that front building. I don't want to, like, it's weird to say like tricked out a foundation, but I mean, we
You did it right.
We did it right,
Yeah.
right? And it's hard to like, I almost, it's not glamorous stuff, but like the notion that, wow, we are making sure that our older, I'm a participant in an ecosystem that's making sure that our older housing stock, which is the most affordable housing stock, when you build luxury, you're not building affordable, but you got to maintain the housing stock that gets older and older, because that is the next generations of affordable housing.
Yeah.
And you want to maintain that so that it doesn't get torn down, and so more luxury housing doesn't get built there, right? That is important. And I consider myself a participant in that system, and it is one of the best feelings. You know, the second property we own is in Civic Heights. You can see it on my Instagram. I have one photo on my Instagram. It's the Civic Group. That's the name of my LLC, the Civic Group, because housing is a Ben Franklin provided housing. Like, it's you can do well by doing good. It is such a civic enterprise. And so the one photo on that that Instagram account is the community space that we just renovated, and we put like these banners or shade sails and lighting, and we repainted. You know, we sealed off the front. We put fake ivy on front so that residents can have a place of their shade.
It's their home. It's a
home.
If
it's a
people
home.
come and visit, they want to feel good about where they live.
Yeah.
Right? So you're helping them feel good about where they live.
Right.
Yeah.
So you can hear it, and like I get energized about that.
I love it.
And I just wanted to. That doesn't often get. That gets obscured in the term. Yes, landlord. Yep. So, anyways, that's one thing. So back to your actual question. I was just responding to.
No,
right?
no worries.
I think this policy is hard, right? Because it's not Econ 101. Explain. I mean, you understand the finance side of this, which, with all due respect to our elected officials, not all of them are experts, economic experts. They're as good as the information that they get,
100%.
right? And understanding who owns property, B, the second and third order consequences of a default, what that looks like, is not the most intuitive thing to wrap one's head around. So I think some of the policymakers, say, oh yeah, we appreciate your suggestions and concerns. But we'll see when it comes to the outcomes, right? And so we're pushing to make sure that we get heard in various ways. But yeah, I think the struggle here is the education around the second and third order consequences that no one in this system wants. No tenant wants to be, evicted from, a Wall Street bank that potentially buys a local credit union that goes under because they have obligations and right. And I'm just using these words that as soon as a lot of people hear them, their eyes gloss over, because like, what do you mean default credit union, coming in, buying assets at a discount, and then likely, they may choose not to maintain that 1940s building, as I'm choosing to do. They may choose to demolish it and build luxury because that's the highest ROI for their dollar. But right, so we can talk about this, but it's not as an intuitive concept to understand in an email.
But we might be able to break it down. But let's go over this. Let's go over. You interviewed 300 people, or you got a response.
I sent out a survey. Yeah, I didn't.
Got a survey.
Yeah.
I answered the survey,
mm-hmm.
and I think they're just straightforward, simple questions. Can you kind of go through just not every question, but what the questions were about, and then from that, what type of people out of 300 can you kind of break them down? Like, who are we probably looking at?
Yeah, sure. So the goal of the survey was to get an accurate picture of who owns who are the housing providers in San Diego, right? And what are their current financial circumstances in terms of, their property? So, the first question was like, is this your primary? Do you qualify as a small business under, do you qualify as a small business?
Yeah.
I think like 80% of respondents, yes. Is your, how many units do you own or manage? The overwhelming majority were less than 50, right? Like less than 50.
They're not, they're smaller. Yeah. So
they're not mega
massive,
corporations.
Yeah.
Okay. So is this your primary source of income? Yeah. Most people are 60 to 90-year-old retirees who.
So most of the answers was this is their primary source of income.
I think something like 68%.
Okay. So called 70.
Yeah.
Okay. So that's a big number. Okay.
How many months of reserves do you have to pay your mortgage? Overwhelming majority was, 0 to 3, right?
Wow. That right there, that's one of the biggest, that's the biggest problems right there, that question. 0 to 3 months to pay your mortgage. Yeah.
Yeah. And then scale of 1 to 5, how concerned are you about the trade-offs you may have to make as it relates to providing safe and affordable housing? Again, I mean, and people are very rightly so, I think, very concerned. If you don't have income coming in, then what happens when the refrigerator breaks, or what happens when the shower breaks? People are not going to be able to come out of pocket indefinitely, and I think that's like another part of this, that it's the indefinite uncertainty around, how they're going to be able to run their properties in a way that's consistent with their own personal standards. And I know I'm delving off from your question about
no, totally, I get it. I mean, this is it's so complicated, because it's not like don't pay your rent and okay, cool, the landlord will just not pay their mortgage and we'll just see how that goes, because it's not that we just have a mortgage, like you said. Is what if somebody vacates a unit and you have to return the unit? That's a cost. What if, like you said, what if there's a plumbing problem? What if there's this cracked slab? What if a hole falls through the roof? What if there's a health?
What if there's mold? What if? These are all things that it's not glamorous, but it's like, this is housing.
But it takes capital. It takes money, capital to fix those problems.
Right. So so the survey was like 7 questions, and it was designed to have that get at that in an aggregate sense. And I bet, and I bet there, the surveys were answered over the course of a weekend, and a lot of the people who fall into that category of mom and pop, they're retirees. They're 60 to 90. So I'd be willing to bet with some confidence that there are a lot of folks who were just not able to navigate a Google survey, and so I think that number is probably those survey responses are a conservative representation of the state of things.
Yeah, I mean, and I tell people, I said, the state which we are. I mean, I listen, and I always make this disclaimer so people know I don't watch the news. I don't watch CNN, Fox. Any of my data comes from talking to, I was telling the guy that we talked to, I was telling him I did a Zoom call with Alan Nevin the other day, local economist. I know him, like he's on the podcast. What do you think of this? The first thing he said is, what do you think about the eviction thing? He was like, that's the stupidest thing, like how it was handled. And, I'm watching guys that are, whether they're billionaires or not, that own a bunch of hotels. And they're saying is the government shut down my hotel. I have 50 hotels. And if I have zero revenue, I still have to pay to keep the hotel up while nobody's coming in. And now I have to go back and negotiate with all of these banks to pay them. But then he says it gets worse, because some people were banks that lent me money. Some of them were hedge funds. Some of them were insurance companies, but also some of them were teacher funds. So some of my hotels, this builder said, the debts on them is backed by pension funds. Mm-hmm. Maybe the California Teachers Fund. And the government's saying, I can't pay because you said nobody's allowed in my hotels because law. And I get it, but he's like, how is this going to work here? What is the pension fund? Like, they don't want a hotel back. They want me to run it. They don't know how to run a hotel. So so now you go to multifamily. It's the same thing. It's like people don't get paid. It's
Well,
just
I think I mean, look,
it's this.
I care about housing policy because housing is shelter, and it's
the same. Yeah.
I mean, yeah, sure, the economics are the same, but like, we're talking about like just this is on Maslow's hierarchy of needs. This is a necessity.
Yes.
And especially in a pandemic that requires shelter in place, right?
Yeah.
So, I mean, hotels are in a tough situation.
So let's talk about. So it sounds like the out of 300 people you surveyed, and you and I know the person in San Diego. Let's take San Diego Beach, wherever. The average person that owns real estate is 69 years old. They're a mom and pop. They don't have a bunch of reserves. This is probably their only job. Somebody 80 years old is probably not out there doing a side hustle, and they rely on this income. And if they don't get rent, now here's the problem, right? So we can talk about.
And ironically, they're also the group that's the highest at risk for serious, for contracting and being, contracting COVID. So yeah. Right, so it's kind of a double whammy when you think about it.
Yeah.
But I mean, that is
so in your opinion, we're here. What's the trickle down effect? So what are you seeing, and what are you telling politicians, and what's the message here so people get that we can clarify? Like, we just gave them the scenario of who owns the real estate. So the person that owns the real estate is not in a financial position to be giving free rent away. Unfortunately, sorry, they're just not. So if they don't get rent, are they getting a check then for the rent? Are we getting a check in the mail? Or is that coming next week or in May? And so if that's not coming, let's talk about what happens next.
Yeah, I mean, so the fact of the matter is, I think this is one of a classic case of you've got a fragmented group of people who have not historically been well organized. And so they're, with all due respect to the apartment association and, you have lobbying groups that exist. I mean, they tend to represent the interests of larger housing providers. And so when you have policies like the federal government saying, well, if your loans are backed by Fannie and Freddie, you can have a 12-month forbearance provided you don't evict folks. That's great. That's a great policy. But it doesn't cover this. It really doesn't cover, and that was also a question in the survey, are your loans backed, federally backed by Fannie?
Which are, most aren't by
small. Most aren't. Okay, so, all right. And then you have Governor Newsom's, again, 90-day forbearance with, Wells and JP Morgan and, local variety of local credit unions. But that's for residential mortgages. It's not for, the multifamily, the multifamily loans. So it's a case of fragmented voice, in my opinion, fragmented voices who are not historically well organized because they're just, again, like 60 to 90-year-old retirees who own, a couple of units. Why should they be? Why should they have a lobbying organization that represents them? Because they haven't needed to, right? So that's a problem here. That is a real problem. And none frankly, as far as I'm concerned, there is no good answer yet at a local or a state level that addresses that fact. I think you're starting to see in the media. There was a New York Times op-ed written yesterday. There was a CNBC article yesterday.
Did you see that one I emailed you?
Yes. Thank you. Yep.
It's like, thank you. They're recognizing.
Yeah, they're recognizing the problem, and I think problem recognition, and I'm happy about that, honestly, because problem recognition is the first step. If you can recognize the problem, you can solve for it. So that's where we are, frankly.
And so for me, I'll just gonna jump in here and chime in. So the problem I have with all of this is I always tell people, I went through the last recession and we were doing finance, and now I'm going through this, whatever we don't know exactly what it's going to be. Is it short-term, long-term, whatever? We'll know in years, right, when we look back. But so my wife does commercial financing, and she's funded $1.5 billion of loans. So she's done some loans, and so everything was great. And then all of a sudden, the media comes out and says you don't have to pay rent, and interest rates on apartments were great, and lending was great, and it was very, very, very strong and solid. And within about 2 weeks, the things started crumbling and cracking. And so Crystal has really good relationships with all the banks because she knows them all. And we know CEOs or chief credit officers. So all of a sudden, hey guys, we're having a little bit of problem. Well, what's the problem? Well, the tenants are calling the 70-year-old landlord and saying, hey, Joe, I'm not going to pay. And then the landlord's going, what? Oh, I didn't, what, like, what? Okay. They hang up and they called their lender, the small bank, not Fannie or Freddie, because they don't want to yield maintenance, prepay, and all that stuff. They said, my tenants aren't going to pay. What do I do? They're like, whoa, we don't even know what we're going to do. We gotta, okay. Those started calls are hammering. And then it went from, oh, you have a loan in to great. Oh, if the loan's not, all of a sudden the whole thing started deteriorating within 2 weeks of the lending. And so I tell people the most important thing we can do in this time, in this environment, is pay our bills, because we don't want the thing to get worse. And how it could get worse is, even in residential lending and business lending and commercial lending, a lot of people are like, we'll just wait and see. But the problem about wait and see is the secondary market that lends us money is in fear too. They're in fear that these people are not going to pay bills, car notes, mortgages, credit cards, business loans, leases, all this, and they're going to get screwed. So they're now going, we're going to back off. So all of a sudden the guidelines went from super favorable, you're a real estate investor, we're going to give you the money, we're excited, we love this environment, let's go, to we're going to pause, and basically we don't even want to give you any money now. So you basically just turn the light switch off in industry. And I saw many deals blow up. I talked to yesterday a buddy of mine that will put out, that's a developer. He's saying he's hearing friends, basically their funding is getting freezed when they're in the middle of building an apartment. So all these things are going haywire, and it's literally over is people going to pay their bills. And so this is the trickle-down effect that I'm seeing. So now, and then all of a sudden I know tons of property management companies. I'm like, how are you going to pay your bills if you don't get it? But then some of them have a minimum fee written in their agreement. So if you get zero rent and you have to pay your bills, they go, hey, Ben, yeah, you still owe me $5,000. What? Well, yeah, that's I can't pay you. So I'm just giving you, this is what I'm seeing here on the front lines of this business.
Yeah.
And that's where I get nervous, is the lending right now has been turned off. So to get a loan, it's ugly and it's not attractive, and it doesn't really want to make anybody do anything,
Yeah. My reaction to all of that is the importance of incentivizing necessity spending during this time. And look, the federal government passed a $2 trillion stimulus measure. And I know the headlines have been, well, $1,200. That doesn't, great. That in San Diego, that doesn't even cover my 1 month. But if you look under the hood in Section 2107 of the CARES Act, there's this new thing called pandemic insurance. It's one, there are a lot of bells and whistles in it, right? There are SBA loans, there are payment protection, right? But there are corporate bailouts, which, not this conversation, but a large part of that stimulus are direct cash transfers to people who are unemployed as a result of this, or have been had their hours cut or had their pay cut, or have gotten sick, God forbid, and have to shelter in place, like that, or family members who have to take care of people who've gotten sick, and so they can apply for unemployment. But also, there's this whole new thing called pandemic insurance, which the long and the short of it is the average unemployment check, weekly unemployment check before this was $385 a week. The federal government increased that by $600. And so if you have substantially lost income, and again, like the devils are in the details and you should read them, but if you've lost income because of this, or if you're an independent contractor or self-employed and you're still working, but if you're like an Uber driver, right? And or working at Instacart, right? And your hours have been cut, but you're still working, you can apply for this pandemic insurance. And the point of that, people have been saying, oh, this is UBI. This is Andrew Yang at work. I mean, the difference between this and a UBI is perpetual. This is a temporary measure to finance a public health necessity. And that's liquidity. That's coming into the system to finance that. And so, Ray Dalio, I don't know if you know, I worked at Bridgewater for 3 years.
Oh, so, you did?
Yeah.
Oh, so, wow. We'll have to have another conversation about that.
That's another conversation. But
awesome. Amazing guy. Amazing.
Yeah, I mean, he wrote a great. He writes about big debt crises, right?
He has his video out. You can watch it. The 30-minute
How the Economic Machine
works. Yeah.
Right.
Yeah.
But recently he wrote a short blurb about the importance of incentivizing necessity spending throughout this crisis. And unless you're a debt hawk, which you really shouldn't be in this environment, there are resources here.
Oh, for sure.
And society is going to, we are going to struggle. Like that is a given. The question is, are we going to struggle well or are we going to struggle poorly? Right? And so making sure that the money that has been set, people know about this stuff is so important. And I really wish our elected officials would do a better job of focusing on educating the public about how to, that these resources exist. I'm a third-year law student. I take a ton of tax classes. I geek out on that stuff, right? But come on, not everyone does.
Yeah,
it's just the reality. Yeah. So the responsibility of our elected officials to educate and inform and how to get that, as opposed to educating, informing about how not to pay rent. Look, to me, that's struggling poorly. That's struggling poorly. And we can get into questions about, is $2 trillion enough? But the federal government seems like they're already working on phase 4, right? So they know
it's going to be it's a start. I mean, Nancy Pelosi came out today. I don't politics. I just saw something. So I clicked on this thing and she came up and she's saying, I will say this. They did come together quickly and they put this package together and people have been working hard and they're trying to get money into the Americans' hands. And they're all like, look, everybody's like, we might hate each other, the politicians, but it's like, we need to get money to the people now. And the other thing is she's saying is, to give businesses 2 months and say, here's the bills, that's great, but that's not enough. And I think I liked her mindset. She said, we need to say, we'll give you 6 months if you need it.
Yeah.
Because I think, in my opinion, I think people, if they go, oh, I'm only getting a paycheck for 2 more months and then it might be over, they're going to hoard their money and they're not going to pay you and I rent because they're like, what if this doesn't last? So if she's like, if we can say we'll give that business 6 months of payroll, even if they're not open, then, Ben and Kenny are like, we're sitting here going, wow, okay, I can relax and breathe. That's 6 months to see how this thing goes. Hopefully my bartending job's open or my Uber or whatever it is, my hotel job or, on the cruise ship. But I think it's going to be 1 and 2. And I think this is going to be continuing until they see this goes. But she agreed. She goes, the most important thing is to get people money so they can pay their bills. And I think they're starting to recognize and changing. They're realizing, no, we're not giving you money to give it. This isn't a stimulus package to go out and go to, to dinner.
It's not Keynesian. It's not like a Keynesian. Yeah.
You can't go anywhere. It's to pay your bills.
Right.
To pay, like you said, you're staying house, stay in there, but pay the bill.
So, those are my thoughts on that. We really need to incentivize like necessity spending. And provide, and to your point, provide certainty, some semblance of certainty around that.
Yeah, I mean, I think there's a lot of fear in people.
But my at a policy level, the concern that I have around the eviction moratorium as it stands is it really compounds the problem for folks. I think it sends a message, and with the misinformation and with the rent strikes and all of that, people may have a false impression about, and the rent, and it will come due. But how do you expect someone who's not working or who has substantially lost income and who's on pandemic insurance to pay that back rent? Like we got rid of debtors prisons a long time ago, right? Like, I think the point is everyone's got to chip in and everyone has to sacrifice. The question is, can we do so equitably? And right?
Yeah.
I just think the 6th month kick the can down the road that's bad policy as far as I'm concerned.
My wife said it right in the beginning. She goes, they're going to make up rent. And we're like, we managed 1,000 units.
No.
When people said, we'll pay you later, I mean, the percentage of pay you later was, I don't even know what it is, but let's say it's not going to be in our favor of landlords. It's not, it's going to be in their favor. Yeah.
So I think there are two things here. Like, one, it's the actual policy that gets passed. And then two, it's like there's a signaling there's an elite signaling, right? Like of elected officials who have a responsibility to signal that, so that people don't have a false impression of what's happening here. But yeah.
No, I mean, look, I appreciate it. I appreciate you putting the time in. So where do you kind of go from here? Like, what's your next steps, or what's the next steps for you and this whole kind of like, obviously we're just trying to get in front of the right people to tell them. I think it's like, we're not telling you what you're doing is terrible. We're telling you just to make sure their people are delivered the right information, like the pandemic insurance, like let them be informed then that, hey, you're going to get the money to pay your bills. And maybe they need to explain how that works. Like, take a person that makes 40,000 or 50,000 or whatever a year and break down, this is how you make now, and this is how you're going to make the same based on what we're going to give you, so you can still pay your bills. That's as simple as I look at it. I don't know,
Yeah. I am going to continue organizing and mobilizing, and as we get more data about what's happening, the picture's changing on a daily basis, and I am going to continue making sure that the people who we're talking about here, or who I'm talking about, who I think are being just really, their voices aren't heard, get heard. So I want to avoid another, 2008, but in a different way, because I think that there it was residential. We're talking about a very particular subset of folks here, and I hope we struggle well. That's
so. To end this, how can we're going to put this video out there? Somebody sees this, that is the ideal person we're talking about, and they're like, I'm being affected. What do you think they can do to help the situation?
Well, I think, one, I'd love to hear from them.
Okay.
First and foremost, right? Like,
how can they get in touch with you? What's the best way?
Send them email. Is that?
Yeah. We'll post your email. I'll get it. I'll post on the video. Okay, cool. Just email you and get in touch with you. Okay.
Get in touch with me. We're thinking through. I'm thinking through with how to scale our the picture of
our
people,
voice,
right? The voice, like it's not just San Diego. It's
it's nationwide.
The article you sent me. It's it's across the country.
Yeah.
And so how to scale the representation of this group, and really it's not this group. It's how to get good housing policy. How to get housing policy that enables us to not have just destructive, outcomes. So we're going to be, so get in touch with me is the long story short.
Okay. Yeah. That's the way they can help. And then just, you want to hear from more.
The more numbers we have, the more,
data.
So take this, you get in touch with me. I'll send you the survey. The more numbers we have, the richer data that we have, that matters, right? Data matters. So yeah, I mean, you could write your local elected official. I don't know. It's probably not. It's somewhat effective, but
Yeah.
numbers matter.
I think we're seeing some stuff in the media, but I think if people really don't pay and the demographics we're talking about doesn't get the collection and they can't pay, I think this is going to blow up quickly and it will be heard. And it might, hopefully it doesn't get there.
We're trying to do it before it blows up, man.
No, exactly. Yeah, that's why I'm saying it. So I'm going to put this out quickly and through social media and our channels and try to get in front of as many hands as I can. And then look, I'll post your information. Ben, thanks for your time. Thanks for doing what you're doing. I know you and I will stay in touch. Let me know how I can help. And, I think just getting this message out there and hopefully delivering it to people that are real estate investors and maybe this is not them, but they know 10 other people to send this message to them and reach out and, let's get a megaphone out there so the government can hear and they can do something real quick because they're acting quick now with other things. They need to act real quick on this.
It's a giant game of whack-a-mole, there are a lot of holes to plug, but we got to make them aware of the holes, right? Or else they won't plug them. So thank you. I mean, this was fun. Hopefully we can have different conversations in the future about, other topics.
I'm sure we'll be doing more Zoom calls as this progresses because I think we need to, because this is an ongoing conversation, whether it gets good or bad. Because I think the good thing is there is things in our housing in California. We can say, for example, that policies, could be tightened up or relooked at. And a lot of things right now in our world are being looked at because
housing was a mess before this. Housing was not good before this, right? No. Let's not exacerbate it.
90 or 120 days for eviction is not good either. I'm just saying, that was one of my things, not to go on a tangent, but what happens if you have all these people to evict? It takes 120 days, 90 days to do it now. And they're going to take a year to evict. We're going to have to change that too. So I think there's some things to be said. Ben, appreciate the time.
Hey,
we'll be in touch and I'm going to make sure this gets out there.
All right.
Awesome. Have a good one. Okay,
Stay safe.
You
Stay
too.
healthy.
Bye. Yeah.